United States is the world's currency base. The United States dollar, excuse me, the U.S. dollar.
Everybody looks to us.
Everybody uses us. I mean, if you go to any country in the world, you'll find that dollars usually trade in those countries, formally or informally. And the IMF, the World Bank, all because of the post-World War II financial agreements, basically do their business in dollars. So if the dollar is in a collapse, which it isn't right now, but if it does, if the weakness turns into collapse, that could threaten world financial stability. So we also have to be concerned about the whole structure of finance, the whole way that countries trade with one another and transact their business. This isn't just a matter of promoting exports.
You went back to the 80s for an example on the strength of the dollar. Kathleen Wright via Twitter goes back to the Clinton administration. She says the dollar went from $1.24 during the Clinton surplus. Now the dollar's worth about 75 cents, a little less than half.
Right.
Are there comparisons to be drawn there?
Yes, there is. I mean, surpluses are good for the strength of the dollar. If you're a foreign bank thinking about investing in the debt of a government, which government are you going to want to invest in? A government that has mounting deficits or a government that has mounting surpluses? You're going to obviously go to the surplus side. So that strengthens the dollar. In some respects, again, from the export standpoint, one of the problems of the 1990s was too strong of a dollar. And so we had problems with exporting. We could buy everything in the world that other people were producing because our dollar had huge command in foreign markets, but we had problems with our exports. Well, the dollar's weakness is a concern for a lot of reasons. It may indicate the onset of inflation. It may indicate that foreign bondholders and people doing business with the United States have doubts about the United States.
The U.S. faces economic challenges with Europe due to the value of the currency. The U.S. dollar used to have more value than the euro, but recently the euro has risen in value drastically compared to the U.S. dollar. The U.S. economic downturn affected the value of the dollar, and the combined force of the European Union made the euro stronger and higher in value.
Africa. The U.S. has invested lots of money into Africa that goes straight to the oil sectors, and the U.S. is expected to get a quarter of its crude oil imports from West Africa by 2015. The scramble for the world's resources has barely lessened the recession.
The relationship between China and the United States goes beyond the value of the dollar. I mean, they're a big buyer of our debt. During the period of stronger dollars, they were the principal supplier of a lot of our manufactured goods, clothing and electronics and so forth. And so we have this enormous financial legacy relationship between China and the United States. We'll continue to do business with them for a long, long time. The weakness in the dollar, however, is causing the Chinese to wonder whether or not they should continue connecting with the dollar. The renminbi, the official currency of the Chinese, may in fact go independent in some respects. They may recompose the portfolio of currencies that support that. That's a complicated thing, but they may have fewer dollars in that ratio with or in that portfolio for the renminbi and more other things like petrodollars, whatever. I don't know. You know, a lot of people say that the Chinese, what the Chinese do in the next year or two, financially with respect to currencies, may have a huge effect for a long time to come. India, China, this is the emerging great superpowers.
China's and Japan's economic relationship with the U.S. has played a key role in the economic downfall in the U.S. The U.S. is too dependent on China and Japan. Japan is buying up major U.S. corporations, and Sony can serve as an example. China and Japan are both buying U.S. bonds in large amounts. Our government seems to continue the trend of U.S. interventionism in Latin American countries, Colombia being one of the main focuses to establish military bases to control the war on terror in Latin America. This greatly increases America's ability to target cocaine production, which has been an issue in Colombia with the support of Marxist FARC guerrillas.